Hey everyone, it's Zach back with a new mortgage video. Hope you're all having a happy Thursday. If this is your first time seeing one of my videos, welcome to my channel. If you're a returning viewer, welcome back, where I'll try to demystify all things mortgage related. If you find this content helpful, please like and subscribe. So I wanted to give a quick market update on what I'm expecting to happen with the Fed and how that will affect mortgage rates in the upcoming months. Since the last CPI report, mortgage rates have been steadily improving, and the market has shifted to where a September rate cut is much more probable now than it had been before that report. However, there still seems to be a sense of uncertainty about a rate cut just because we've had this kind of moving target throughout the year where the market was projecting at one point a March rate cut, then May, and it's just continued to get pushed back. So I want to explain why I think personally September will be definitely a rate cut at the very minimum of a quarter point, and what has changed to make me feel that way. Let's move back to December of last year. This is when the market kind of get carried away a little bit. It was due to some good inflation data. We had several months of good inflation, and the market was really confident that we would get 6 rate cuts, the first one coming in March. I never felt that strongly, but I did think we would get a rate cut in the summer. What changed is the first couple months of this year, we got much hotter than expected inflation data. Overall inflation coming down still, but not as rapidly as it had been at the back end of 2023. Now, the last few months, inflation has started to come down quicker. And most importantly, in my opinion, this last inflation report, we had a much bigger drop in shelter, which is the largest piece of the overall inflation pie. It has been for quite a while. So as of last month, the core personal consumption expenditures reading, which is the Fed's preferred measurement of inflation, was at 2.6%. Now the Fed will every quarter project what they expect to happen the rest of the year in terms of inflation, in terms of rate cuts. At this last meeting, where the majority projected 1 rate cut this year, they also set that end of year core PCE number at 2.8%. So assuming that inflation does not jump back up, which I would imagine they do not expect, we're already lower than where they thought we would be by the end of this year, which is a really good sign. On top of that, we've seen a clear cooling down of the job market. Now, we're at 4.1% in unemployment. That is still historically quite low, but compared to where we were, 3.5% at one point, consistently under 4 pretty much since COVID happened, that is a bit of an uptick. Initial jobless claims, which comes out every week, that has started to tick up, suggesting that the next unemployment rate will be even higher. So that combination, I think, is going to cause a September rate cut of at least a quarter point. We'll have 2 more inflation reports, CPI, and 2 more unemployment reports between now and the September Fed rate decision. So if we get 2 more good inflation reports, which I expect we will because of shelter continuing to decline with people renewing rents and that trickling into the data, if we also start to see a continuous rise in unemployment, which I'm not as confident in, then I think we could get 0.5 point rate cut. Most likely, though, it's going to be a quarter point rate cut. I think it's also worth mentioning that the Fed rate cut is not directly affecting mortgage rates. And in this case, in particular, if we get to September and the market is projecting, let's say, an 80% probability of a quarter point rate cut and a 20% probability of a 0.5 point rate cut, and we only get the quarter point rate cut, that's going to, if anything, hurt mortgage rates. Now, Jerome Powell's comments may shift things, but the decision itself, it's what the market is expecting versus what they actually do that is going to move mortgage rates. It's not the actual cut itself. Those thinking as soon as we get the first rate cut, mortgage rates are going to plummet down, I would not expect that. I would say that if we get, say, 4 rate cuts this year, when the market right now is projecting most likely 3, but there's a high percentage of only 2, that would help mortgage rates quite a bit. But just a first quarter point rate cut when the market is already baking that into the current rates, that's not really going to move the needle. Looking ahead, the big thing that I'm going to be looking for is the next unemployment rate. That will be next week. So I'll probably have a market update after that comes out. But thanks for tuning into this video. If you have any questions, feel free to call, text, or email me, and I will see you next time.